doesn't love a bloody good look into someone else's investment portfolio? In this video, I'm going to share my total investment portfolio. So that means my Trading 212 account and my Hargreaves Lansdowne account. And you'll see exactly how they're performing. No sugarcoating, no BS. This channel is about everything investing, and I'm trying to reach financial independence by the time I'm 50. 38 now, so that gives me 12 years, so I best get cracking. So I'm going to use this channel over the duration of that period to track my progress against that goal. Simple as that. And what I'm also wanting to do is create a community in the background of like-minded folk that want to do a similar sort of thing. If I can inspire one person to get started, then I'll consider that a success. And if there's anyone out there that has actually started their investment journey as a result of watching any of my videos, please do let me know, because I'll give you a shout out, and I'd actually just love to hear from you. So get involved and let's secure our financial future together. I'm running out of places to do this now. Right then, boys and girls and everything in between, this is my Hargreaves Lansdowne account. So this was an ISA portfolio that I had over the last couple of years up until April this year when I moved across to Trading 212. What I wanted to do was try out a new platform, basically, to hold an ISA within. You know, it'd be nice to hold your ISA within the same platform year after year, but I wanted to try a couple of new ones out. So this year I'm going to be doing Trading 212, which we'll come on to in a minute. Next year, probably going to try either Vanguard or Free Trade, just to get a good broad experience in terms of all of the different ISAs. So within here, value of the portfolio is currently sitting at 11,830. Right, it did tip over £12,000 at one point about a month ago, but we know what's happened over the last month, so stocks haven't been doing quite so well. Now that represents a 30% return for me. So I stopped dripping into this when we're probably talking January this year. So it's grown 30% to the 2 years prior to that, where I've been putting into it, dripping into it over that period of time. It's now 30% up, and that represents £2,663 in terms of gains, unrealized gains, of course, because I have no intention of selling these. So the holdings that I have within here, as you can see, I haven't got many. I've got 8, and basically 5 of them are funds. Now I'm always going to want to make sure that the vast majority of my portfolio is going to be made up of funds. So the funds that I have within here cover the world. So I've got the UK, I've got Japan, I've got the Pacific excluding Japan, I've got Europe, and I've got the S&P 500, of course. On top of that, I then have 3 individual holdings in terms of Aviva, Shopify, and Tesla. And when you look at the gains in terms of where we've had the most amount of returns, the biggest winner we've had over the last month is 100% going to be Tesla. So it's 10% up over the last month, and it is now reaching at a point where it's nearly reaching all-time highs. So Tesla's absolutely flying at the moment. Again, it's taken forever for it to get anywhere near where it was back in February time when it was at those highs, but it is picking back up again. And over the course of this year, it has continued to quarter on quarter increase in sales, quarter on quarter increase in profit. And with my investment into this, I am 90% up. Really happy with that, of course, obviously, and no intention to sell anytime soon. Shopify over the last month is down 3%, so it's in line with a lot of tech businesses actually over the last month, though. Absolutely nothing to be concerned about. Quarter results, when they come out, every time they're beating the previous record, so I'm not concerned about that at all. All the holdings I have in here with it, incidentally, they're not going to change. This portfolio, as I do updates on it, unless something fundamentally changes within the 3 businesses that I hold, this is never going to change. And I'm never going to be able to add to it because it's an old ISA. So it is just going to grow and grow and grow, hopefully, over time. Aviva had another dividend from Aviva this month. There it is, £13. And that was because I have auto reinvest turned on. That was automatically reinvested back into Aviva. So I bought more Aviva shares. So next time I get a dividend, I'm going to get a dividend on those 3 shares as well. So the snowball begins. So the UK has had a really good month actually. It's up 3% over the last month, and that represents some of the best returns across the world. So the UK is really starting to get back to where it was pre-pandemic. So I know there's a lot of concerns around supply chain, and there continues to be a lot of concerns around increased measures happening. The whole thing is a nightmare, but the UK has been in growth quarter over quarter. We've had a good couple of quarters in terms of growth, and if that continues, we're going to continue to see that grow. So 16%, considering I haven't dripped into this for a long time, you know, it's okay. Over the last few years, the UK has struggled in terms of returns, but these things are cyclical, and who knows what's going to happen next, and you got to be in it to win it. So I'm going to continue to hold that, and we'll see what happens. So both my Asia holdings, in terms of my Japan equity index and my Asia Pacific excluding Japan, are down 4% over the last month. So it's been a tough old month, but absolutely nothing to worry about if you're a long-term investor. Europe is down also 2% over the last month, not quite as bad as Japan. So in general, Europe is down, but UK is leading the way. And the S&P 500 is down 0.95% over the last month. So there is concern left, right, and center. We're going into a crash. It's a bear market, panic, etc., etc. It's down 0.5%. It's not going to grow every month. If we're invested for the long term, it means absolutely nothing. It means if you're continuing to drip into it, you're getting it at a slightly cheaper price. Don't worry about it. By the way, if you are interested, here is a view of what it costs me to hold a Hargreaves Lansdown account. So as you can see, I have to pay a 0.45% fee, and some of the funds have a marginal fee as well. And at the moment, for a £12,000 portfolio, it's costing me about £4 a month. So yes, Hargreaves Lansdown are one of the more expensive portfolios, no question about that. But it is hardly breaking the bank. And for me, it's a fee worth paying for the absolute level of confidence that you get that this broker is a proper broker, for the absolute level of confidence you get that you can pick up the phone, you can speak to someone within about 3 rings, and you can have whatever query you have resolved. What they need to get right next. You got to do this. If there's anyone from HL watching, please look at those fees. Please look at those stock dealing fees. If you're going to continue to charge £11.95, you're just going to lose the next generation, I'm afraid. People, they're not going to pay it. So you've got to get that one right, guys. Next up is my trading 2-2 account. I have invested, so this represents my ISA for this year, for this financial year. I've invested 9,898 into here. I've seen unrealized gains of 681 quid, which means that the portfolio is worth 10,850 quid right now. So the returns on that over the course of this year, not the best, but you know, that's the way it goes. Did an update a month ago, and at that point most of my holdings were down over the previous month. Over this previous month, most of my holdings are down. So look at the 1 month view on 3M. No reason why that should be down. It's down 1%. It's just down because there's general sentiment within the market. Look at Alphabet, down 0.97%. No reason why that should be the case. It is just general market sentiment. And actually, there is still plenty of upside within Alphabet. So within 3M, obviously it's a dividend company, so it doesn't really matter what happens there. For Alphabet, there is still undervalued for me as far as I'm concerned. There's still plenty of growth in there. When you look at the numbers, when you look at the revenue growth, when you look at the profit growth month over month, quarter over quarter, year over year, it's massive, right? There's massive opportunity still to be had within Alphabet. Amazon, down 4.35% over the last month. So, you know, it's taken a massive hit. We're coming into the Christmas trading period and it's down 4.35%. When you check Apple out and it's down 3% over the course of a month, you know that the market's tanking. If there isn't a real reason behind it, it's because the market's taking a beating. So there's a number of funds there. We won't go through those. Johnson & Johnson, down 2.86%. Legal & General, I added this month. Forgot to mention that before in previous video. And this, just like a lot of the UK businesses, is up. So it's up 1% over the course of the last month. I had a look into this business. I did a video on it, and as a result of doing the video, I digged deeper and deeper into it. And crikey, I'll put a link to the video here. It's one of these businesses, and it is an exciting looking business. Really strong dividend, really strong cash position. It's up 5% this month. I'm going to try and get some more cash into that. I've only got 400 quid in there because I think that's a great long-term hold. McDonald's and Microsoft and Netflix are some of the few that are up within the US. So Netflix quite considerably, nearly 10% up. I don't know if that's anything to do with these guys. But my position on this is I'm not actually sure on this one anymore. I'm going to do a little bit more looking into it. I think that it doesn't have the room to grow that perhaps some of my other holdings do. I'm a little bit worried about Netflix, if I'm completely honest. I'm going to dig into it a little bit deeper. Perhaps what I'll do is next time I do a monthly update, I'll have dug into it. I'll have worked out what my plan is to it for the long term. I've got some questions around its potential to grow in the future beyond where it is now. The market cap is absolutely massive. The PE is massive for this business. I'm not convinced fully. So let me know your thoughts on Netflix below. PayPal's down 6% over the last month, nearly. In a world where we're moving to completely cashless almost, this just represents a buying opportunity to me. So I'm going to try and get some cash into this while it's on sale at the moment. I think PayPal has a massive future across the world. You just need to look at your own behaviors. How often do you use it yourself? So personally, I use PayPal all the time. If it's a product that I'm seeing that I'm using more year over year, on top of the numbers, on top of the fundamentals, of course, that for me, you know, that's research in itself. It tells you that this business has got a future. So no reason to worry with that drop. A buying opportunity, that's all it is. Right, biggest increaser of all my portfolio everywhere obviously is Rolls-Royce. Look at it. What are we? 36% up. Now, if you want to know why it's increased so much, watch this video here. Love this business. I'm going to be holding it. I originally was planning on holding it only for a year, but the way that they have gone about their business over the course of this year, the things that they've done to rebalance their finances, and the future potential and the contracts that they're creating left, right, and center with all sorts of businesses and governments and territories and technologies. They're looking at nuclear, they're looking at electric planes, they have got contracts that are securing, the contracts that are coming in and lasting for 30 years. They're selling off weak arms of the business. I'm just got myself a bit more of a level of faith of the confidence within the board of this business now, and that has meant that I've changed my position. I've changed my mind. I want to be holding it for a lot longer than I originally had planned. Tesla, again, incidentally, we have talked about it already. So why have I got it in two portfolios? Well, basically because the first one, Hargreaves Lansdown, is an ISA. I can no longer add to that. And secondarily, if I do like a business, I'm going to buy it in a couple of different places because I can drip into it in trading 2 and 2, because they ain't going to charge me 12 quid a pop. So just a little bit in there, not much obviously, but it has increased significantly over the last month, which has given me some good gains, 17% up on that. Uber is up 21%, right? But I'm still 16% down on it. And it is another business like Netflix I'm going to have a bit of a think about over the course of the next month. Still not in profit. A massive market cap at 90 billion. Revenue of just 11 billion with no profit. So no PE ratio. Now it is all bought in terms of future potential. So it is, for me, encroaching into the gambling territory for me. So I know I haven't got much in here, 80 quid, but I've said it before, I want to be buying businesses that I'm going to hold forever. Have I got a level of confidence that I'm going to be holding Uber forever? Uber is a bit of a flip of a coin for me. It could go one way or the other. It could take over, or it could crash. They could come into serious problems so they don't start making some profit soon. So it's a thinker. I'll let you know what I do next month with that one. Unilever, one of the UK businesses that has struggled over the last month, down 4%. It's a UK business, but it's a global business. It's as much into the UK as it is every part of the world, as far as I'm concerned. Consumer goods business. No reason to worry about that. There's nothing in the numbers that are indicating that should be a reason to worry. Buying opportunity. Dividend business that's on sale, basically. FTSE 250. So the FTSE 250, it behaves in a very different way to the FTSE 100. So as I mentioned before, the FTSE 100 within my Hargreaves Lansdown account, over the last month, that's up 2.9%. The 250 is down 2.15% over the last month. And they don't correlate. They don't operate in the same sort of areas, and they don't grow together. If one does one thing, one tends to do another. Typically, over the last few years, there's been a lot greater growth in the 250, and basically because there's more growth within smaller cap companies, they can increase their value a lot easier than the likes of Unilever. A Unilever is not going to increase its market cap by 100% over the course of the next couple of years, but a FTSE 250 cap company could. So it makes up a proportion of my fund account within trading 2 and 2. My fund pie within trading 2 and 2 is where I'm going to be concentrating the most amount of cash that I'm going to be injecting into this portfolio over the remaining months of this year. Now, interestingly, this gives you a good indication of what the world is doing. So 0.5% up. So the whole world over the last month is 0.57% up. And this is why you have to diversify. So whilst everyone thinks that we're in a bit of a sticky situation at the moment, well, actually, the world economy has increased by 0.5%. Virgin Galactic then has done nothing over the last month, 0.25% up. Now continues to be good news coming out of this. They're continuing to be sorting out all the legislation in the background. There's a lot of media attention around space travel at the moment. Not going to be adding any more to this position. I'm 10% up at the moment. We are nowhere near. Let's have a look at the 1 year view. Look at these two spikes. We're nowhere near anywhere near that. We're getting a point of resistance here. We're going to be sticking around this for a while until something really fundamental changes, until some really good news comes out, until they start talking about when they're going to get paying customers, etc. I think that it's going to stay around that level for a while, and I'm quite comfortable for that. This is the sort of business, I've said it before, it'll go to zero, it'll go to the moon. But while it's in this territory, this is where you got to have patience. If you believe in a business, this is where you got to be patient, and in the long run, this could really pay you back. Equally, it could go to zero, and I'm not convinced which way it's going to go yet. But it's part of my speculative portfolio, so I'm prepared for it to do that. It's money that I can afford to lose in the grand scheme of things. And it's important to have these businesses within your portfolio that you love, that you like the sound of, that you think might go to the moon, because this is what's going to keep you investing into the funds, and it's going to keep you making sure that you're doing the right thing in terms of some of the more boring aspects of investing. You've got to have some of the exciting stuff as well. Disney's another big faller, actually. 4% over the last month, despite all the parks opening, despite increased revenues within subscriptions on Disney Plus. So it just reps a buying opportunity for me. I wish I could get paid every week so I could drip into these businesses that are down for no reason. So all of those businesses I have within these pies. I have a dividend pie, I have a fund pie, I have a grow pie, and I have a new car pie. It's broken down, and I've got reinvest on for everything. I've got the dividends here, so let's have a look at how many dividends I've had over the last month. So the dividends that have come in over the last month then have been a few funds that have come in. We've got Pepsi, we've got McDonald's, we've got Realty Income, because that comes in every month, of course. 3M, Microsoft, Unilever, and Johnson & Johnson. So that pretty much covers the last month, and that, as far as I'm concerned, is pretty good. You know, what I really want to do is increase my dividend income. I've said it before, I haven't really concentrated too much on my dividend portfolio previously, so I'm going to try and really ramp up the investments into that area and try and generate some proper dividend returns. Now, if you are an investor yourself and you want to know what my thoughts are on a couple of businesses that I am planning on holding forever, check out this video here. And thanks for watching.